So this actually came from Jennifer Guidry. So what was supposed to happen today is my friend Lori Osborne, who I've known for a very long time. Actually, Allison, I knew her from my fundraising days. She was a PTA president as well.
Oh, okay.
So I knew her from there. And but now she worked in home sales, and not like, she did a lot of mobile home sales, different stuff like that. And she started working for a company called Grand Endeavors, which is a Jimmy Jacobs offshoot. If you're familiar with builders out there, there's Jimmy Jacobs. They're one of the builders, and they're kind of high-end builders that do. They're bigger builders. They're the ones that build the $300,000, $400,000, $500,000, $700,000 houses. So, and I've been dealing. The reason why this kind of came up is I've been dealing personally a lot with new home builds, and talking with Joey, I know she's been dealing a lot with new home builds, and I think I've been to every new home builder in Comal and Bexar County in the past 3 months. I've been to every single community just because of the demand that's going on right now. And so that was kind of what sparked this conversation. Is I was like, hey, we really need to talk about dealing with new home builders. So I'm going to go through this presentation that they sent me. This one particularly has to do with construction lending. A lot of people are very confused about lending because the process is very different. And I'm not an expert by any means. I was hoping to have Jennifer here. She couldn't make it. Lori couldn't make it. But I'm going to share with you what you know, and I'm leaving this up here a little bit. If you'd like to call Jennifer, there's her information. Again, also my friend Robin, she does a lot. Guys, shop around. Talk to these people. Ask them if they have experience doing new home builds. What's up, Joy?
This is one thing that pops up a lot, is new home builds and them wanting you or your client to use their lender and their title company. And a lot of times it kind of pushes, it kind of takes away that whole some of these people get their pre-approval or their pre-qualification, and then they show up and they're saying, if you want to save $5,000 on your closing costs and XYZ, you'll need to use this lender. And it's kind of a
little shady.
Yeah, it's difficult.
And I know why that is. So, and I will say this, for those of y'all that have watched these things, I work with Robin a lot. She's my lender of choice. Again, I'm going to say this again, just to beat it in everybody's head. You cannot tell somebody that they have to use a lender. That is not your job. That is their decision ultimately. So the reason why I like Robin is because of her experience level. This woman is highly experienced. If she says somebody's pre-approved, I've never had it fall apart. And that's important to me, because nothing's worse than that 11th hour, the loan goes to crap and then you're all scrambling, right? And so I like to use Robin. So if somebody comes to me and they go, hey, we want to buy a house, regardless if they say new build or not, I tell them, call Robin, get pre-qualified, right? They can call whoever they want. If they start looking in the new build market, I very plainly explain to them, hey, look, when we get here, you're pre-approved with Robin. I'd love for you to use Robin. Robin's great. You know what I mean? And I tell them flat out, I don't get any kickbacks. Like, Robin doesn't buy me lunch. Robin doesn't do anything. Okay. I just like Robin because I know when she says it, it's gospel. And that's big to me because I don't have time for that, screwing around with that. But I tell them, if we start looking at new builds, I'm going to have you apply with them as well. The only reason why is because of those incentives. Now, it doesn't mean that $4,000, $5,000, $10,000 is the greatest thing in the world, because if you get a loan at one place at 2.25 and they're giving you $10,000 at 3.5, that doesn't equal. Okay, it might if you're like really tied up for cash to close or whatever it is, because it's not really, they don't give you 10 grand. They apply it to closing costs, whatever you got to use it for. It's an incentive, right? And a lot of times, if you notice, the incentives aren't necessarily always tied to their lender. It's tied to the inventory. The inventory that's been sitting around a little longer tend to have higher incentives. And I think, I'm not 100% sure on this, because when you create a loan, within 30 days, they typically sell the loan. When that loan is sold, there's a transaction, there's money being made. And I think that if they use their internal lenders or lenders of choice, they get that money, and I think that lender puts it back towards it. I think there's something in that workings is how that works. I'm not 110% sure. We'll have to get Robin on and get her to really explain all that to us, because there's a lot that goes on behind the scenes with that. And I do not pretend. I am not a licensed RMLO. That is a whole separate license with a whole separate, they're actually federally regulated. There's a lot more federal laws. It's a big change. So to your point, yes, They will say, if you use our lender, and I think another reason why is that they trust their lender and they don't want some Mickey Mouse guy coming in on a new build, like, hey, yeah, we're going to build your loan, and the loan originator you're bringing to the table is crap, and at the 11th hour the whole deal falls apart, because that's going to kill them, because now they have a custom built house for somebody who doesn't qualify anymore. So I'm sure there's a lot of reasons, but to your point, allow them to do both. You can do both. It doesn't hurt your credit, doesn't do anything like that. It just gives them options, and options are important for your clients. You have a fiduciary responsibility to your client. If it is better, if you get 2.5 and 2.5 over here and you get $10,000, that's clear. I mean, that's a duh, right? Let them do it. And I mean, you no matter how much you love a lender, you have to put your client in the best possible situation. So it's okay to shop around. It really is. And I will say, and I tell my clients, what's important is expertise, follow up, communication, all those things have to happen. So, but we're going to be talking about construction lending. I have gone through this with her, so I'm going to share it with you just real quick, and then I'm going to kind of go on a soapbox towards the end here. So bear with me. So overview, what we're going to be talking about is loan options, frequently asked questions, and misconceptions. That is when it comes to getting loans on new builds. Now, my wife's in the other room. My wife was a licensed RMLO, so she's probably going to come in here in a minute, tell me I said something wrong, which will be great. I hope she does. So, but she's probably not dressed for the camera. So, what are the options that are out there? So when you close on a new home loan, you can basically close once, twice, or 3 times. Okay. And when I say close, that means go to the table and signing a whole bunch of papers, going to the title company or lawyer's office and signing. That's a closing. You can close up to 3 times in a new build. Now, what does that mean? Well, there's construction loans, interim loans, and then permanent financing. So sometimes you go construct to perm, sometimes you go construct to interim, sometimes you go, there's a lot of jumps, right? So a one-time close is just like it says, you close one time, one set of closing costs, your rate is locked in at the time of closing. Offers and modification options to qualified borrowers upon completion. So when you're done with the house, the tricky part about this is the lender always wants to be able to attach the debt to something that's worth money. Okay, if you're building a $500,000 house and they lend you $500,000 and there's just a piece of dirt there, they have no collateral. So that's going to change as they go along. That's why you switch to permanent financing at the end, because now they can actually put a lien on the property. And then sometimes you'll modify right there as you get to the end. It affords borrowers a confidence in knowing that their permanent loan is already secured. So if you do a one-time loan, and it depends on the builder and their credit qualifications, that they know that they're not going to have any issues, because every time you close, you have to kind of requalify. I mean, there's this whole process in there. So on the one-time close, you already know that your permanent loan is going to be taken care of right at the beginning. Loan payment is interest only based upon the drawn funds during construction, and then modifies to permanent, fully amortizing loans once the home is complete. So, and recast options are available. I'm not going to talk about that. I know that a little bit, but I will say this. If you're building a $500,000 home and you get this one-time closed loan, you're getting a loan for $100,000 or $500,000, but they're not just going to give anybody $500,000, not on a piece of dirt. They're going to say, how much does it cost to pour the foundation? Go pour the foundation. Cost us 20 grand. Okay, now your foundation's poured. Here's your 20 grand. So there's draws that go along with this. A lot of times during that draw process, you're paying interest only on that $500,000. So your principal is not dropping. Whenever you have a loan on anything, a car, whatever it is, when you make a payment, you're typically paying both interest to the bank, your fee for borrowing money, and you're also paying what you owed. So eventually you will pay it off. On an interest-only loan, all you're paying is the interest. You're never going to pay that loan off. You're just paying the bank fee basically over and over again. So if you do a one-time close during that draw process, you're not reducing your principal. You're just simply paying the loan. And then what this is suggesting here is once it modifies to a permanent loan, then it becomes fully amortized, meaning now you're making principal and interest payments. Okay. We're going to do the next section we're going to be doing is on investing. And I'm going to talk a lot about how amortization works in that section there. but basically there's an amortization curve that pays your principal down as you go. And that's what it means. If it's fully amortized, that means you will pay the loan to zero if you keep making payments. So I'm sure y'all have heard 30 years, a 30-year loan. Well, that's a 30-year amortization. From 500,000 in our example to zero will take you 30 years. You have a 15-year loan, that's a 15-year amortization. It'll take 15 years to get to zero. So, and then there's the two-time close. Borrowers get a separate construction loan, and then you have to re-qualify for a permanent loan. Okay, they call this construct to perm. You'll hear that term a lot. They shorten it up, construct to perm. So it's two separate loans. And notice the key word in there. You have to re-qualify. So if you were talking to somebody who has a construct to perm loan, they are not allowed to buy anything, in my opinion, in that time period. While you're building a house, you cannot go buy a boat. You cannot go buy a car. You cannot go buy all this stuff because it's going to screw up your debt to income ratio. And then once you go to requalify at the end, all of a sudden your debt to income ratio is crap and you're done. So be very, very careful whenever you're doing that. Again, let the loan originator talk about this and to this. It's perfect for a borrower who wants to use a specialty program on their permanent loan, such as a VA or certain jumbo loans. So a VA loan's great. But why is a VA loan great? Anybody know? 0% down. If you're a veteran, you don't have to put anything down on a VA loan. That's fantastic. So if you want to utilize your VA loan, sometimes a construct to perm would be the best way to do that. It's perfect for somebody who has a house to sell, but doesn't want to move until they don't want to have to move twice. So if you want to live in your house while your new one's being built, the two-time close is going to be the best one in there. And you can qualify with higher debt to income ratios because your debt to income is based on the fact that you're living in a house right now. You have a mortgage payment. That's going to go against your debt. And if you go back to the one previously when we were talking with Robin about debt to income ratios, there's certain percentages, like you can't, if you make $10,000 a month, you can't have $9,000 worth of debt that comes out every month. That's a 90% debt to income and your whole thing's done. But if you're just doing a construction loan, a lot of times you can get a higher debt to income ratio if you're going to close again at the end after you've sold your house. Downside of it is there's two sets of closing costs. So construct says right here, First United does not do that. I can't speak to that. I don't work for First United, but that's what it says. So you're going to close twice. What are closing costs? Guys, those are the escrow fees, the titles insurance, the surveys are probably going to have to be redrawn. All of that kind of stuff falls into closing costs and rates could change. That's the other thing. In a best case scenario, it takes about 6 months to build a house. Most of them are running about 9 months. Joey was telling a story earlier before we got started about a house that's going to take 2 years to build. So in 2 years' time, what is your loan going to be? I mean, right now interest rates are incredibly low. In the 1980s, interest rates were 12, 13% on a house. You know, if you start off here and it's 2.5% and the Fed changes the interest rate and all of a sudden it climbed and, 9 months later we're at 6%, you're going to get a 6% interest on your loan. So that's kind of a downside with that one. How much money do I need to put down on a construction loan or a one-time close? Well, it's called a conforming loan. I don't want to speak to that. I kind of, again, one of those things I kind of know, but you can get as little as 5% down. On a jumbo loans are anything that's bigger than, I want to say it's 500 and something thousand. It depends on state and area, but it's right here in Texas, I think 540, I want to say. You have to put more down. Oh, so there it is. Sorry, total project for 537. God, I'm good. Okay, I thought it was 540. So 537. Any loan above that's considered a jumbo loan, and you're going to have to put more down. But you can get as little as 5% on the construction, which is great. A lot of people think it's 20% because you have to do a conventional loan, but you don't. Questions: how many closings do we need to go through? Well, anywhere between 1 and 3, like I said earlier. You can buy the lot, construction loan, and then refinance at the end. You can do 2 where you buy the lot and then have the construction built on top of that, or 3, you can do a one-time closing. You got to talk to the lender about which one works best and what the ups and downs are about that. Can I actually coordinate closing on everything at one time? That's a great answer. It's kind of tricky, but it can't be done. You got to talk to your loan originator. I don't want to build through this one because I've seen it done before, and I got to be honest, I didn't know what happened. And that's why I like having good loan originators out there. What are the different links offered on construction loans? Typically, it's 12 months. That's because it's an interest only loan. They don't usually like to do interest only loans longer than 12 months. That goes in investing, that goes just about anywhere. Nobody wants longer than 12 months on an interest only loan. There's just too much risk involved on the lending side. But you gotta work with a builder that has a very clear timeline. A lot of builders in our area right now, they have very specific, they know exactly what it is. I was at a Lennar building place, a Lennar community yesterday, and they have 13 phases, and each phase takes this amount. I mean, they know it down to a science, and it's pretty cool. Um, do I make payments on the loan during the construction period? Yes, you do. And they're interest only based on what is drawn out. Like I was saying, if you got $500,000 and they take 20 grand, you're going to be paying interest on the 20 grand, and it's slowly going to go up as we get closer and closer to the end there. If I already own my own lot, can I use my equity as a down payment? Yes, you can. That's a big one. If you own a lot that's worth $80,000, you have $80,000 in equity. They're going to put a lien against that land. You're going to what's called encumber it, but that's a good thing because now you don't have to come up with that 5% if that 5% work equals the value of the land. So that's always a nice point. When is my down payment due? Guys, y'all know the answer to that. Down payment's due when you close on the loan. Okay. If you got 5% down, when do I have to bring it? When you sign the papers. Does my builder need to get vetted with First United or any builder or with any lender? Yes. They are going to want to know everything about that lender, what their solvency is, what their build time is, how many homes have they built. They're going to qualify the lender just as hard as they're going to qualify the client, because the builder's the one who's spending all the money. So yeah, there's going to be a lot of vetting. Most builders that you use are going to be big time builders that we've all heard of before, KB Loans, Lennar, whatever it is, DR Horton, Jimmy Jacobs, Grand Endeavors. Those guys, they're used to that vetting process. They have a whole packaging department. They just send it over to it. It's not something you have to worry about, which is kind of nice. What if I want to build my house myself? The answer is no. I didn't know that. You cannot be the builder of record on your own home. You have to find a different builder. The borrower cannot be the same person as the one who signs the mechanic's lien. A mechanic's lien is like any other lien on property, but it is held by the person who is doing work. So you can't lien against your own house. You will see this a lot with title companies. Like they got a new roof put on, they never paid the roofer, and so the roofer put a lien on the property. They go to sell the property, you got to pay the roofer off. That's what that means. Is there a limited amount of draws a builder can take, and how involved is the borrower in the draw process? Typically, draws are about once a month, but we will allow up to 2. That's First United. Every bank's different, and quite honestly, that's not your concern. That's between the builder and the lender. They're going to want to figure out their process. Every builder, again, has a very, very strict way they do things. They'll work that out. Not really up to us. What if I want to put more down on the house once it's complete? Yeah, go for it. That's the same with everything. If you want to put $1 million down, who cares? The bank's not going to tell you no. Who cares? That's an easy one. Can you use a one-time or two-time construction loan for major renovations or for a tear down? Yes, you can. I did know that 110%. You can use home equity line of credits. You can use a construction depending on what it is. There's FHA programs. It's called a 403K, 40 something. I can't remember now. Where you can do construction loans to live in the house that you live in. Yeah, I mean, you can move in as long as it's livable, and they will be able to do it. Then they'll wrap the whole thing up at the end. You can do it. You can do it through FHA. I don't think VA's got a program. There's a lot of conventional loans that have that program. You need to talk to your lender about it. I will say this from experience. If you try to use a construction loan, home loan that wraps at the end, especially through FHA, you have to have hell of a good administrative persistence, we'll say. You've got to be damn good at paperwork. You got to be damn good at, and you got to stay on top of it, because otherwise it's going to start to hurt. Common misconceptions, guys. All banks, credit unions, mortgage companies are created equal. That is 100% true. I like this. They say they encourage you to shop around. Now, this came from First United. All good lenders will tell you to shop around because they're confident in their ability, and they know you're probably not going to find anything better. Remember, they're going to try and get the best rate they can. Only thing that they're really selling is service and experience, right? Can we figure this out? So yeah, they're not all created equal. I don't like it when somebody goes, well, I called my bank and they said that they can get me a loan at this. That's one bank. You gotta shop around. Do I need 20% down? No. You can do 5%, 10%, 15%, 20%. 20% is kind of worst case scenario most of the time. There's a lot of programs out there as well, grants and first responder and teachers and all kinds of stuff. But talk to the originators. I don't need insurance on a house while it's being built. Are you kidding me? Yeah, it's called the builder's risk premium. Yeah, you got to have one of those. That's the same as investing. Duh. If you frame a house and put in drywall and whatever, and you're starting to put in cabinets and it burns down, that's still lost money. It doesn't have to be completed before you lose money. I mean, if you got to start over, you got to start over, and that's a builder's risk. There's insurance companies all the time. You just tell them, hey, I'm building. There's builder's risk. If you're an investor and you decide you're going to be doing something, like all my investment properties that I'm flipping, I have a builder's risk on, because if somebody comes in and steals all my cabinets that I haven't installed yet, it falls under that. Construction loans and one-time close construction loans are so difficult to get, I might as well not even try. No, I agree with that statement as well. They really aren't that difficult, especially if somebody knows what they're doing. It's not for you as the realtor to know. It's just, you need to understand, hey, have you even tried? It's always worth asking the question. It doesn't hurt anything. A lot of people are very worried, well, they're going to pull my credit. It's going to hurt my credit. I don't remember the exact numbers, guys, but I think your credit drops by 7 points on a hard pull. And I think 30 days later, that 7 points comes right back. During that 30 days, you can pull your credit as many times as you want, and it's the same 7 points because they know you're shopping loans. So if somebody wants to build, take them over there. Let's start talking about it. So that's the presentation from First United. I'm sorry they couldn't be here. But I do, now that we have a minute, I want to get onto my soapbox. So hopefully everybody's ready for my funness. How do I get this thing off the screen sharing? Okay. So is everybody ready for my soapbox about building?
Yes.
If your client at the onset of your first conversation, guys, we're sitting down, we're at the kitchen table, they say, we want to buy, and you're signing the buyer's representation agreement. At that point, you need to clobber them over the head with, you do not go talk to new builders without me there. Okay? They're going to get excited. They're going to want to go and, hey, we're thinking about we might want to think about building new. Cool, let's set a day aside and let's go do that. Okay? Get them in your car and drive them around. I don't know this for a fact. I have a sneaking suspicion that, if you remember, the new build salespeople do not have to be licensed. A new build home is not considered real estate until it has changed hands one time. That first time, it's considered personal property. This is exactly how I explain it to my people. It's considered personal property. It's like selling a car. You can sell your car to some guy in the Walmart parking lot. He hands you $500. They hand you a title. You can do that. That is 100% illegal. I mean, not illegal. It's 100% legal. And you're supposed to report it and pay taxes and transfer the title. I mean, there's a lot of paperwork behind it, but you can do that. It's basically the same transaction. Now, it's going to be more complicated because it's hundreds of thousands of dollars. But you could walk in and with a briefcase full of money and hand it to them, and they just sign the deed over to you and you're done. I'd be foolish to do it that way, but you could. The rules are very different. Their contracts are very different. I kind of laugh because a 1 to 4 family residential, which everybody uses, is 8 pages long. Most new build contracts are somewhere in the 30 to 40 page range. They use their own contracts, which is legal. Your client needs representation, okay? The game changes drastically, and I tell them just like that. The game changes. You need somebody on your side. They're not licensed. They go out there and they get the hard-armed kind of salespeople, just like a car sales lot. They want you to sign something, and that's why they always have like very low, like give me $1,000 and we'll lock this house in for you. Name another house where that happens. It never happens like that. They're really trying to push. So I tell them, like, you don't want to sign something unless you know what you're looking at. You need me to go with you. And that's true. My secondary objective is most of these home builders will cut you out of the transaction as quick as they possibly can. They will cut you out of a transaction because I don't know if the salespeople make more money. I know that the builders don't want to have to pay you a commission. You know what I mean? That's 3% of their profit gone. They do everything they can to cut us out. I've had so many of them come to me and say, well, you weren't here when they walked the lot last Tuesday. I, I have a buyer's rep agreement. Do we need to go? You know what I mean? And that's another reason why that buyer's rep is so important, because you can say, no, no, no. It's either they're going to pay me or you're going to pay me. And if I tell them they have to pay me, they're probably not going to go with your build. So you want to play this game? And you can get kind of ugly with them. So just make sure you're there. Okay, guys, make sure you are there with them. And again, getting them with an experienced home loan builder, don't walk them into XYZ community and say, yeah, go ahead and talk to their lender. Guys, get multiple options. I'm always leery if anybody gives me one option, I'm leery. And so tell them like, hey, let's go ahead and shop around. It doesn't hurt. Y'all just heard my whole spiel on that. It doesn't hurt. Okay. Now, on the plus side, a lot of home builders are very excited to work with other realtors. I feel like they should be. They should offer tons of incentives because I know they got the profit built in there. I just sold a house. Who was the builder? Was it Lennar? I think it was Lennar. I got a 6% commission on that house. I mean, that's huge, right? As just working one side of the transaction. So I feel like a lot of them should have some kind of incentives for us to bring them in there. Sometimes they do. Pay attention. Also, if you see a new build in the MLS, make sure you look at that buyer's commission line. Okay. I've seen it. It hasn't happened to me, but I've seen it to where it'll say 3% originally. And then once they realize somebody's in there, they'll go in there and change it to 2.5% or 2%. Guys, if you're going, print it out. No, 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 no. On this day, y'all said this. That's legally binding if they're using the MLS, right? Somebody licensed had to say that. So just be leery. That's all I can say. Just be careful. If you have questions, call me. Call Ryan Parker. He does a lot of new build stuff too. And I'm not telling you that building a new home is a bad thing either. That's not it at all. Most of these new home builders, they're really, really good. They are just high volume. They turn quick, and it's kind of a blurring process. It's not like doing a single family one-off thing. They're trying to sell 30 houses that month, right? So it just moves quicker. So ask the questions that you have to go with. There was something else I wanted to say. I can't think of what it is now. Any questions before I go any further?
I have one. You know how you were saying that each builder, they can create their own contract and stuff like that. You know, is there, I mean, I know we can't change contracts. We're not attorneys or lawyers or whatever that, you know, the case is. In a situation where there's language within a new build contract that you're just like, yeah, I don't know about that. Do you advise your clients at that point to get with a real estate attorney to have them look through it?
You can. Here's the thing. When you're talking to the salesperson, they hand you that contract. Remember, this is not a licensed person. They're not the attorney that drew it up. They're not this. They say, Joey wants to buy this house. And they email it to somebody, and then legal sends that contract over. They're probably not going to change any of that. Okay. So if you get to a point where you don't feel comfortable, I do tell them. Like the only thing that makes me feel uncomfortable when I'm looking at these, or the main thing, I guess, is always the refund option. Like if they're asking for $5,000 down and their loan doesn't qualify, then what? You know what I mean? That's what I want to know. And I want to see the language in the contract that says that, because that's the risky part for my client. Okay. I always ask that question. What's y'all's refund policy on the earnest money? What if the loan falls through? What if COVID hits and my client loses their job? What if an asteroid destroys the house? Can we change our mind? You know what I mean? You got to go through those kind of questions, because again, that's your responsibility. Would I recommend them getting with a lawyer? If it got gnarly, if they're like, no, we require $20,000 down and you're not getting it back. Yeah, we need to talk to somebody.
Okay, because I have a client that's $12,000 in. Well, I would say client. They're not really a client because at this point in time, they're just trying to figure out what their options are. But the contract, you know, the refund policy, there's nothing in there. They went in there without a buyer's rep. the builder provided a service name for this person to represent this. I mean, anyways, it just sounds altogether really kind of like shisty, and they don't have a recourse, and now they're stuck because this home has had delay after delay after delay, and people who have purchased after the homes have been started after their home are further along in the process, and they don't have any kind of recourse, and they're out 12 grand if they walk from it.
Yeah.
So I looked through the contract, and it says language like the builder has 2 years to complete their home, and they don't get their options money back. And I mean, I told them to talk to a real estate attorney, but at the same time, they feel like, well, they're stuck in a contract. I was like, well, did you fully understand the contract?
That's a big thing. And a lot of times, like I've gotten personally into a couple legal battles in real estate, and they're few and far between. I wouldn't say there's a lot, but a lot of times just a letter from a lawyer will scare the ever living crap out of them.
And that's what I advised.
It's almost worth a couple $100 to have them drafted up.
Yeah.
Hey, can my clients were done, you need to refund, and that's when it gets above your head, right?
Yeah.
You can't, but to your answer, I like your response. I 100% endorse your response. You need to speak to somebody else about this. Okay. Because we can't offer legal advice. We can't tell them. All I say is, I'm like, I don't like the way this reads. Can you please explain it to me? Can you explain it to my clients? What's the recourse on this, right? You can't say that, well, legally, that you can't say that crap, right? We don't know. So, but yes, to your answer, yeah, by all means, especially when it starts to get weird. I have another client of mine. They went without me. Well, this is before they were my client. They went and they're going to go get a build, and they were going to build a $350,000 house. Well, of course, 3/4 of the way through the construction, the husband loses his job, COVID layoff. Okay. He no longer qualifies for the permanent loan. So the house is done now at this point. He doesn't qualify. They're dragging him along because, well, he changed industries now. So now we have a changed industry, and they're trying to find a loophole, but they're trying to charge them daily interest since the house is completed. And that's where I stepped in and raised hell. I was like, absolutely not. Right. And I said, it's because they did have an exit clause on financing contingency. And I was like, then we're going to execute this. And so they dropped the $150 a day or $50, whatever the crap it was. They dropped that because I was able to read through the contract and point that out. But they're still dragging my client along. I've told them to cut bait, but they're kind of emotionally attached and whatever. We're not going to go. But yeah, to your answer, yes. The last thing I wanted to talk about new builds is this is what I was thinking earlier, is when a lot of things change. These new builders don't offer option periods. They don't offer home warranties. They don't offer a lot of those things that we're very, very used to. What they tend to offer is something called, a 1-year warranty. Okay. We don't pay for a home warranty because we will warranty the house top to bottom. Make sure you get that information and understand it fully. Most of them are pretty good. I'll be honest. I've seen a lot of them. They're like, well, the drywall, the siding, the paint, everything, unless of course you run into it with your car. And then there's 10 years on the foundation and 10 years on the roof, and they're usually pretty good. But make sure that you understand it and your client understand it, and who they call and how they handle if there is a problem. Because as well as I do, you live in a house for 15 minutes, and all of a sudden you realize that plug doesn't work. And it's like, well, who do you call? You need to make sure that kind of stuff is covered. So I do like working with new builders. I'll be honest, other than the weirdness, they're typically a lot easier. They're typically way easier. Once you get everything, the contract, and we're all very, very clear, just walk away. Like today, as soon as I'm done with this meeting, I'm driving up to New Braunfels for somebody who's getting a new build, and she's just asking for my expertise. Like, should I be worried about this, or does that look weird? And that's just me because I do a lot of rehab. She wants to ask me about the quality of construction, and I don't mind doing it. I mean, whatever. It's kind of fun to walk in your houses, right? So they're typically pretty easy. A lot of times there's incentives. I'm mad about this one because they're only paying me 2%, but whatever. But you just got to pay attention. Pay attention. They always, like this particular one, they want 2%, and White Line has changed their mailing address. And so they said that the mailing address on the W-9 was different than the mailing address on something else, and they were trying to weasel out of paying me. I'm like, oh hell no, hold on a minute. So I went and had to update all the paperwork. So just pay attention, guys. If you need help with them, let us know. Like I said, Ryan's really good with it. Eric's really good with construction. I've been doing a lot of new home sales too. I mean, we've got people over here that'll definitely step in with you. And I know Joey's doing a lot of it. Allison, tell us what you're doing, because I think it's brilliant. Hey, like, you're just hanging out there. Like, tell me, I thought that was.
Well, I've been introducing myself to a lot of them. I belong to a group on Facebook called Shift Talk, and it's a lot of all new builders. So I've talked to a lot of them on there. Anytime I've had questions about new builds, I'll ask them. I have a whole list of reps now that I talk to. I sat in at Bella Vista as a sit-in realtor for 3 days. And there's a few others that I have coming up that I may be sitting in also.
What does that mean? What does it mean to be a sit-in realtor?
So if they go on vacation, you take their spot for the day, and you get different lenders offer different things. But like at Bella Vista, if a buyer comes in and they're not represented and they buy a home within the 30 days of the time you sat in, then you automatically represent them and you get the commission, the 3% commission or whatever they're offering. If a buyer comes in and is represented, you get a bonus for each client that buys within the 30 days. Bella Vista right now is $1,000 bonus for every client that walks in when you're there that buys.
So if their salespeople are MIA.
Yes.
Gotcha.
Yep. Yeah. So if they go on vacation or need a day off, they'll call their realtors that they work with, and they'll call and ask you to come sit in for them and be them for the day.
The Lori, the lady that was supposed to be on today, she said they've got two salespeople, and they're busier than one-armed paper hangers, right? They're just extremely busy. And I'm thinking to myself, I'm like, 2 people? They both don't want to watch the Super Bowl on Sunday? Like, you know what I mean? It's like, and a weekend would be a pretty big day. And so that makes perfect sense. And that's kind of a brilliant idea. I mean, what was your experience there? Did you just sit there twiddling your thumbs playing Angry Birds, or were you talking?
I had 6 clients come in over the weekend. 2 of them I'm getting the bonus from because they were represented. 2 of them were not represented. 1 ended up buying, so I'm getting the commission. So I'll be getting the commission from that. They just did all the paperwork on that. And then 1 I've been in contact with, and he's looking to buy in March.
So you sat there for a weekend. I'm going to assume they're $250. I'll say $300,000 homes. So that's $18,000 on 2 of those, and then another. So you made $20,000 sitting there that weekend.
Sitting there that weekend, yeah. I will be. Yeah.
So I'm going to call Bella Vista. Say that's brilliant, guys. I mean, go talk to them.
Yeah, yeah. Once you get to know them,
I'm sure you did sit there with your finger in your nose for most of the day.
Yeah, most of the day you're sitting there, but I did some work on the computer that I needed to get done. I made a couple of calls on clients that I needed to call, stuff like that.
That tip right there. I know Joey's going to be doing that. I'm going to tell you right now, I'm going to go do it. I'm curious. I want to go see what happens. Right?
Yeah, I mean, it's great. Like I said, it's great once you get to know.
Walk in and say, hi, how's it going? If you're ever out, call me and I'll represent you. What do you do?
The Bella Vista that I worked with, the first time I had met her, I had met a DR Horton rep, and they were the ones that told me when I first started, was he told me, he's like, go to new builds, introduce yourself, drop off your business card, and ask if they work with realtors. And so I started doing that, and then I had a client actually buy from the Bella Vista community that I sat in on. So I got to know the salesperson really well. Mm-hmm. And really that's just it, is going to these new builds, even if you don't have a client, and just getting to know the sales reps. The more they know you, the more they're going to use you.
And you're just talking about their model homes that you walk in.
Yeah, just talking about model homes. If you have a potential client, even if you don't have a potential client, there have been times that I said, I'm here to look for my potential client that's looking.
Yeah, well, I have quite a few that are actually looking, and I do have to go visit some new builds to sit here and just kind of see what they have and to see if they have what my clients are looking for. It'd be a good opportunity to do something like that. But that's crazy. Good job on you.
Yes, thank you.
That's brilliant.
Hey, fortune favors the bold, right?
Mm-hmm.
Yeah.
Hey, Colin, it's Alicia. I have a question for you. So the last two new builds that I assisted clients with, neither one of them appraised at the listing price. So there's always, this pretend competition. Oh, if your clients don't take it today, if you try and negotiate the price, it'll be gone this weekend for sure because there's a million people that are going to visit. And then in the end, one of them was $2,000 and they dropped the price. It was Lennar. They dropped it instantly and it was all good in the end. The other one was, wow, I can't remember the builder, but it was $14,000. And I said, so what can you do for my client? And, I just had a sale with Lennar and they instantly dropped the price and made it right. And my clients actually wound up walking away from that deal. So they gave up their
So,
earnest money to
and
not take that hit.
first and foremost, excellent question. Okay. It, it depends on so much. So the way you phrased it, I absolutely love. It is a pretend, I'm going to call it just a bullshit back and forth, right? Oh, we're just going to sell it this weekend. You're playing poker. I mean, call my bluff or don't. Okay. Now it depends on your client too, right? I mean, you are their fiduciary. You have to clearly explain to them what's going on. Hey, look, it didn't appraise. They're not going to give you the money for it. They're going to say, what can you do? Well, you can pay $800 and hire another appraiser, see if somebody else comes in different. If they come in high enough, guess what? You're probably going to need a third appraiser, right? So it's probably going to cost you more money to get it reappraised. Two, we can bluff and say, hey, look, we're walking unless you lower the price, but you're going to lose the house, right? So if your client is just in love because they found the perfect backsplash, and this is my house, right? They may go, I'm not bluffing. Here's my 14 grand, right? Or you can go to the lender or go to the builder and say, hey, you need to drop your price. I think that's such an interesting question because we were up in Bulverde at Hidden, Joey, help me out, Hidden Village, Hidden Oaks, Hidden something.
Hidden Oaks.
And my client was looking at houses and they want this particular model. They want the Rousseau, okay? And I'm like, great, how many Rousseau? I'm talking to how many Rousseau? Well, we have two. And I was like, and I flat out told her, I was like, this neighborhood is incredibly popular. Don't screw around. If you want one, say something now. And they were like, oh, him and Haw. I'm like, okay. And they came back literally the next weekend and we were looking at them again. One of them had already sold and they jacked the price on the other one up $6,000. And so here's my point with back to what you were saying. They said, we're probably going to jack it up again because it's a supply and demand issue. If they think they can get more money, they're going to raise the price on it. But I'm secretly thinking to myself, well, if you sold the Rousseau at this amount and there's another one a block away that you just jacked the price up $6,000, that appraiser is going to have a hard time. That's running through my head, understanding it, unless he takes into account the supply and demand. There's a phrase for that. I can't think of what it is. Just the general raising of prices. I can't think of that phrase that appraisers use. And it may or may not appraise. So ask the question. I mean, Alicia, you hit the nail on the head. That you either lower the price. I mean, it's one of the three. But
Okay.
Here's my question. And this is me being new, I guess. From what I understand, with a normal, like not a new build type thing, and you're actually doing your own contract and you do let's say you do a third party financing addendum. Within there, it gives you, like, if the home doesn't appraise, you either renegotiate and or your client can walk with their earnest money. Is that not the case when it comes to new builds? Do they have that language?
You need to read that contract.
Huh?
You need to read that contract.
The specific one to the new builder.
That's correct.
Okay. Yeah, because I have one that's, a land contract but we have a third party financing addendum on it. And, I was all really worried about this property not appraising. But the language within the third party financing says if it doesn't appraise and the lender approval.
Yeah, that's only in the FHA and VA, right? Because it's a federal program. And
it doesn't say that. It doesn't say specifically FHA or VA, because I was looking at it and because I was really concerned about it. Anyways,
on a traditional transaction, there is another form.
Yes, I saw it.
that you can say this offer is contingent on the appraisal coming in.
Yeah, and
On the third party financing addendum on, I think FHA and VA, it is written in that clause on the third party. If you're going conventional or whatever else, there is another addendum in the promulgated forms that says you can attach the appraisal to it. Yeah, it's on that first page, like 2/3 of the way down, because you have to write in there the amount that it needs to appraise for.
yeah, no, I've seen that, but I've talked with a lender, and the lender sister, they said that language in that additional addendum that you could potentially do, it's redundant language that's in the other one. And so I'm trying to think, anyways, it doesn't matter. I was just kind of curious about new builds and the earnest money, because Alicia, right, was the one that was saying that her clients walked without their earnest money. And I think that's really,
Oh, did they walk without the earnest money, Alicia?
They did walk without the earnest money, and it said specifically in the contract that if the home doesn't appraise, that
Through you.
The client essentially is responsible for any difference.
There's
see,
your answer.
and I
So
don't understand how a builder can, I just feel like that is, I don't know. I just find that, why would you even want to work with a builder like that?
But here's, like Alicia said, it's this BS back and forth over, it's this bluff and this and that. So here's the thing, like I'm a rehabber, I flip houses, I do rentals, I do all that stuff. And actually I was representing Eric for one of his houses. Well, we go back and forth, we finally settle on a price. Well, the appraisal came in, I can't remember, $2,000, $5,000 short, right? And as a person who's making money on this house, who's trying to eat and pay my mortgage, that $5,000 is going to be important. It's important to Eric. It's important to every flipper, right? That's what we're trying to do. Well, the other guy said, well, my client doesn't have the money, so we're going to back out because we have that clause. So he called the bluff, and Eric said, screw it, just drop the price, right? Now, here's the problem with the new builders. If you're in that Hidden Oaks up there off Boulevardy and 281, these houses are selling faster than they can build them. So they're not going to, you don't have any leg to stand on, right? I mean, you got to pay attention to what's happening around you. That's where your expertise as the realtor, as the licensed person, you need to pay attention. Go before you say anything. You find out the appraisal comes back, shut your mouth, go online, pull up the comps in the area and see how many days on market they are. If everything's like 3 days on market, you're screwed. You got to tell your client, you're screwed. Remember when we sat down and we asked this question, I was like, you better come up with that 14 grand or you're losing the house and 5 grand. Or whatever your down payment was, right?
Mm-hmm.
So it's tricky, guys. That's why you gotta stay on your toes. Gotta stay on your toes with this. So with all that being said, and we're a little bit over, we're pushing the hour mark. I'm going to put in the chat, I am going to cancel next week's training because I'm going to be taking this class. I think it's interesting. Joey and I, before we were getting started, we're talking about our CE coming up. My CE is coming up. I got to have it done by July. So I got like 6 months. I'm not going to wait to the last minute. If you wait to the last minute, you're a fool because you have to have 18 hours and you try and do it in 24 hours or whatever it is. Guys, get some of it out of the way now. This one I just sent to you, I thought was really interesting and I kind of like it. It's a 2-day Zoom virtual class. It runs the 10th and the 11th. So I think that's Tuesday and Wednesday. Right? Am I doing that right? Where's my calendar? What is it? It's Wednesday and Thursday. Sorry, it's Wednesday and Thursday. It's pretty much all day where we have this Zoom meeting. And I'm going to jump on this thing because I want to become, it gives you, not only do you get your CE credit, but you also end up becoming, what do they say? A new home sales agent certification. So you can say, hey, I'm a certified new home agent. And they're going to walk through a lot of this stuff. You're going to get a little extra education. Pretty fun, pretty cool. And so I'm going to do it. It's like $200. How much is it? Yeah, $195. So it's pretty cheap. So that's what I'm going to do. And ta-da! That's number one. Number two is this book right here. Some of y'all got this for showing up last time. Can everybody see this book? I'm going to be posting about it. If you do not have this book, you need to get this book. Okay, the name of the book is The 7 Levels of Communication, written by Michael Maher, M-A-H-E-R. Okay, If you have it, great. If not, so we're going to take next week off so I can do my Zoom class, and you should do it too because we got to get our CE in. And the following week, we are going to have a book club. We are going to talk about this book and everything that we've learned in it. I have not read the book. I've read parts of it. I've skimmed it. My wife's read it. She swears by it. A lot of other people that I talk to love this book. And it says going from relationships to referrals. So it's going to be kind of a sales tactic thing. So we're going to have a book club the following week, the week of the 17th, is what we're going to be talking about, is what we learned in this book. So read up, make yourself smarter. Don't be lazy. Read a book. Okay. So that's all I got today, unless anybody's got anything else.